All right, now we're going to move on to learn day trading strategies that work in today's market, part 2. Obviously, if you didn't see part 1, check it out on YouTube, and you can watch this one first and then go watch that one. Doesn't matter if you do them out of order. In part 1, we talked about 2 of the 5 energies that I look for in day trading. The first energy is trend, which is the direction of the market, and then energy number 2 is momentum, the strength of that trend. So, right here on this particular chart, just as a review, we use the 50-period simple moving average for trend, which is just direction, and we may or may not trade in that direction depending on whether we have momentum behind that trend. And here's our momentum indicator down here, and that will determine whether the trend has strength, and only if it has strength do we want to take the trade. In this case, it does. However, here, as we put in this final high, you notice that the strength, if I draw it over from here, is weakening, and therefore that indicates that that will be a final high and great place to exit the market. But before that, as far as getting into the trade, yeah, we've got strength. Now, one last thing I wanted to mention about trend before we move on to the other 2 energies today, which is cycles and support resistance. And that is this. There's a saying that you probably have heard. It's a very common saying in trading that the trend is your friend until the end. And the reason for that little proverb is to remind us that it's a higher probability to enter trends early in a new trend and a lower probability trade to enter after that trend has already been developed for a while. So you want to get early and not late. And that's a general rule in trading anyway. The pros always get in early, the retailers always get in too late, late to the party. So what we do to help us to know how early or late we are in a trend is we count waves. Now, I'm not talking about Elliott waves. I'm not an Elliott wave trader, but I have a very objective way of counting waves that does not limit the trend to only 5 waves. And I never recount the waves. They're always very objective. In fact, I can program them in as I've done here. I have an automated little script that counts the waves for me. And we don't have to recount them. They're never recounted. So it's very objective. So the 1, 2, 3, 4, 5. Now, the average trend, even though based on the way I count waves, which I don't have time to go into on this video, maybe we'll do that on another video, but it's basically higher highs and higher lows. That's essentially what I'm looking for. And there's a few extra rules regarding candlesticks with it, but it's pretty much that simple, so it's not complicated. But here's the key. The key is that, yes, it can go more than 5 waves, but the average trend still, based on this approach, is 5 waves. So 5 waves is the sweet spot to exit your trade because, yes, even though the trend can go longer than that, it's less likely to continue beyond 5. That's the average, that's the sweet spot. That's where I'll get out of most of my trend trades. All right, so what we want to do really is enter on wave 2. That's the first retrace in a new trend based on the 50 MA angling up. By the way, the 50 MA is the green moving average here. Once it turns green, we know it's angling up, and that's why. And we've got our first cycle low after the 50 MA angles up. That's wave 2. That's a first retrace in the trend. That's the earliest you can take a trend trade. And these are great trades, especially with momentum. See here, momentum is above the 0 line. This line here's the 0 line. And momentum is this colored line. And again, it's turned from red to green, and it's above 0, meaning that it's bullish momentum, and we've got volume going up. So that's all fantastic. Direction's up, volume's up, we're early in a new trend. Fantastic. That's exactly what we're looking for. And then, as I said, to get out at wave 5. Okay, so that's trend. Now, let's move on and let's talk about support resistance and finish out our video on that because it's very, very important. Now, this is the screen capture that I used for the last video for part 1. And people commented that I have too many lines on my charts. Look at all these lines in here. It's very confusing, right? Actually, to see all those lines clustered together like that is very helpful. It's telling you something. It's information you want to know. And the information is essentially that, yeah, got a lot of support resistance lines that'll be seen by various types of people depending on who uses which support resistance levels. And that means it's going to be hard for the market to get through there because there'll be so many people who won't want to buy into those levels. And therefore they won't. So what specialists will do sometimes, or at least have been reported to do, is to, at the beginning of the day, just like this is here, if they don't want to deal with this and they want the market to come in at a higher price, they'll just gap it over those resistance levels. So we closed here, and then they opened us up here. And that way, it's like, okay, done. Don't have to deal with it. Don't have to deal with people worrying about all that. And you notice it stays above that zone. And also you'll notice that once we get above this cluster of all these lines, then the lines space out again. So we've got R2 here, and there's yesterday's high. Yesterday's high kind of marks the low of that zone. And we got a couple of mid pivots. I talked about these in another video. And well, wave 3 does come in at a mid pivot, but your primary levels are those. So support resistance levels, very, very important. And the primary ones that I use, by the way, are yesterday's high, low, and close. This is for day trading. Those are seen by pretty much everybody and therefore are some of the most important levels. Also, previous major swing highs and lows. Those are going to be ones that just stand out to everybody, that people say, oh, wow, there's a major high. So this one is one, and that's what this blue line is. The blue line is marking that high as being one that stands out in the chart and that the market participants will respond to. So in fact, it's the high of the day so far during that day. Another one that I use is floor trader pivots, very common for day trading. So you've got, well, there's your mid pivot point. And there's R2, R1 is in here. Again, all these labels get kind of squished together because we had all these levels coming in together. And another one that I'll use is Fibonacci levels. So those are the primary levels that I use for support resistance, which are a blockage of the energy. So people use these to buy off of, sell off of, and to take profits into. So very, very important that you have them. However, again, remember, on today's lesson and last time's lesson, you can't trade support resistance by itself. We have to look at what kind of energy the market has as it comes into those levels, because support resistance levels are broken all the time. And so therefore we have to ask ourselves, so for example, let's just look at one example right here. Here's R2, a floor trader pivot level. The market comes up into it. Now, the question is, will it hold this resistance level, or will it break through it? How do you determine that? Well, first of all, the trend is up. That's the green line here. The 50 MA is angling up. Okay, that's fine, but is it a strong trend? And we do see a lot of momentum. See, here's your zero line is way down here. And yeah, momentum is well above the zero line that's up here. And this is our moving average of momentum, and it is angling up. So it's a strong trend. To break through resistance, you have to have strength. Now, when we get over here to wave 3, for example, look, here's our high momentum. Momentum's gone down to 0. And then even though we put in a higher high in price, we put in a lower high on momentum. So this is a weak high. Yeah, price is higher, but momentum has come out of the market. Therefore, when we come into that resistance level, which it is, again, a mid-pivot between R3 and R2, that resistance level holds. The market cannot break through it because it doesn't have the strength to break through it. All right, so that's how we determine which support resistance levels that the market will break through and which it will bounce off of. So we're going to come up with part 3, and in part 3 we're going to talk about what I call the energy of scale, or the fractal energy. And even though we may have trend and momentum and cycles and support resistance, even if we have all 4 of those energies on our side, I still will not take the trade unless the energy of scale confirms it. Oh, by the way, we didn't get to talk too much about the energy of cycles. That's because that's a pretty big topic. So I do a webinar on that. It's a free webinar. And I give you my cycle indicator on that absolutely free, and give you a tutorial on how to trade it. So since this is recorded, and you might, I don't know when each of you are going to be watching this video. It could be any time in history. So send me an email at barry@topdogtrading.com, and I will be happy to let you know at the time when you email me when the next webinar on cycles is going to be held. And again, it's absolutely free, and I give you the indicator and give you a tutorial on how to use it. It's about an hour long, so that's why we don't do it in these brief videos. So that's it. And the next one will cover the energy of scale or fractals. If you like this video and you're watching this on YouTube, please click the thumbs up icon below and also leave a comment telling me what you'd like me to cover in future videos. I'm giving away one of my favorite trade strategies right now. It's called the Rubberband Trade, and it has a very, very high win-loss ratio. This is a winner. But it's also very simple. You can learn it in about 26 short minutes. So to get the video explaining that trade strategy absolutely free, simply click on the image in the top left corner, or if you're on a mobile device, click on the little eye with a circle around it in the top right corner of this video. And after you do that, I will personally email the video to you.